Welcome to Impact Headlines. Eurozone recession fears re-emergence. India's steady growth to continue. Oil prices remain high and volatile. Eurozone's Purchasing Managers Index in October fell to its lowest level since November 2020. According to Rory Fennessy at Oxford Economics, if this trend continues, this poses downside risks to our stagnant growth forecast for Q4. Germany's business activity contracted for a fourth month, while France saw its steepest decline in close to 3 years, S&P Global said. Impact on Sri Lanka. Europe is Sri Lanka's second largest export market. In the first 8 months of this year, exports reached $1.8 billion, down almost 19% from a year earlier. Further, Europe is a key tourist source market, bringing in about 500,000 visitors to Sri Lanka each year. A slowdown in this regional bloc will affect multiple industries in Sri Lanka. India's fiscal position remains solid with steady revenue growth and headline inflation likely to remain within the target band, said the Indian Finance Ministry, adding that revenues generated from direct and indirect taxes have exhibited steady growth and are indicative of the strength of underlying economic activity and a broadening tax base. A recent Reuters poll projected India to be the fastest growing major economy this fiscal year. Impact on Sri Lanka. A growing Indian economy aids Sri Lanka's recovery and prospects. India accounts for about 65 to 70% of Colombo Port's transshipment volumes. Further, India is now Sri Lanka's largest tourist source market. Higher discretionary spending power of its citizens boosts the local economy. Oil prices are high and volatile on worries that tensions in Israel and Gaza could spread into a wider conflict that could disrupt global crude supplies, said Reuters. Prices then fell slightly as efforts to mediate the conflict surfaced, and news shows that the armed conflict remains limited to Israel and Gaza. Phil Flynn at Price Futures Group, speaking to Reuters, said that we are at the mercy of the next headline. Impact on Sri Lanka. Rising oil prices come at an unfavorable time for Sri Lanka as it seeks to build its foreign currency reserves. Reserves have improved in recent months but are just over 2 months of imports. In September, the government relaxed purchasing fuel under the QR code system, driving demand higher.